Mike Tedeschi, Wealth Management Advisor with Perspective Wealth Planning. And this week's market breakdown video, we've got a lot to cover. We're going to take a look at the four major U.S. indexes. We're going to check in with the emerging markets, the U.S. dollar, and some commodities. And we're going to have an in-depth look at the gold miners and the gold mining index. Now, let's start right off the bat here. Let's take a look at the S&P 500. We put in a new all-time high 2 days ago. We finally broke back up over that 3,600 level, and we are fighting right there kind of at that zone right now to see if we can hold above it. As of right now, this is actually a false breakout. All right, we had a big gap up, pushed up, and then fell and closed below that previous all-time high and have not closed above it yet. So we're going to be watching this area very, very close. We just need a small push here to the upside, and then we have a confirmed breakout. All right, we come over and we take a look in at the Nasdaq. The Nasdaq did not make a new high. In fact, this is one of the things that we are going to talk about today. We had a huge rotational day out of momentum tech stocks and into the mid-small caps and some of the more beaten up areas of the market. We're going to watch the Nasdaq to see if it can put in a new all-time high, but we did have a little bit of a weakness in comparison to the other indexes here over the last couple of sessions. Take a look at the Dow Jones. Here we go, new all-time high. We did break above that, and we are holding above the key 29,000 support level, but we are not holding above that all-time high level, which is right here. It's the same kind of result as we saw in the S&P 500, a break above it and then a close back underneath of it, but it held this key support and is now pushing back up. So what happens here is very, very important. Now I'm going to get to say something I haven't gotten to say in years. The Russell 2000 made a new all-time high. We did put in a new all-time high. We took out that high from 2018 and took out the high from earlier this year. And we saw a massive flow into the Russell. If you remember, and we'll pull this right back up. Let's take a look at the Nasdaq, right? 3 days ago, 1, 2, 3, we're looking at this candle right here. This was a huge sell-off event. Open high, sold the whole session. On the flip side, we take a look at the Russell 3 days ago. 1, 2, 3. We opened here and we pushed and pushed and pushed the whole day higher. All right, that was a massive flow out of the tech names that were COVID-related plays because of the vaccine news that came out before the bell on Monday. So it flowed into areas of the market that has not been performing well. We saw the airlines have huge increases. We saw cruise lines have huge increases. We saw the energy space, which has just been decimated this year, huge gains over the last couple of days. So big rotation happening, right? And that is what happens in true bull markets. We see rotations. We see money coming out of things that have run for a long time and flow into new areas of the market that push things higher. We also saw financials do extremely well this week, including the regional banks, which we talked about in the last video, is not doing very well after the election, subsequently have rallied very sharply, right? If a new leadership is going to emerge, right, if money is going to flow out of one thing and into another, and that's going to push higher, that's enough to continue the trend higher, the momentum higher, and that is what we want to continue to see. Now, if everything starts to roll over together, then obviously we don't have a healthy rotation. But what we saw, again, was money flowing out of the strongest area into the weakest area and actually continuing for a couple of sessions, and that subsequently does bode well moving forward. So we're going to keep our eyes there. Let's now take a look at the U.S. dollar. The U.S. dollar still has not made a breakout or a breakdown here over the last few months. We have been stuck inside this range. Every time it looks like we're going to go put in a new low, we get a rally, then we fail right at previous resistance points, then we fall back down, looks like we're going to get a new low, we start to get that bounce. So we are really in that range between 92 and 95. And that is where we're at on the dollar, and we're going to continue to watch that. All right, if we can get back up over 95, that would be bullish. If we fall underneath 92, that would be bearish, and we're going to leave it at that. The emerging markets, another area that saw great action here over the last couple of sessions. Big breakout, new highs of the year, continuing to head higher. All right, it's kind of open skies back up into this zone at 1240 to 1280. That's what we're going to be watching. But this bodes very well for the emerging markets. Across the board, we're seeing a lot of countries have really nice, strong rallies, really good, strong breakouts for the first time in many, many months. That's another area that can really help us continue to head higher. So going to continue to watch the emerging markets, but they continue to rock and roll at the moment. Now let's take a look at some commodities. Copper still holding over that major $3 level, heading back up towards that 330 zone. That's going to be the next resistance, but we have held nicely over that 3 level and have continued to kind of trend higher here over the last few months. That bodes well. Next, we want to come in and take a look at oil, which is trying to break above that 41.50 and hold and close over it. You can see we're basically right there at that zone. We're not closing above it really, maybe by a couple of cents, but this is a big battleground level, and we're just kind of hanging around right there right now. The next breakout spot is basically over 44. That would be a very good signal for the oil market, so we're going to continue to pay very close attention over there. Let's take a look in at gold. Gold had a really nice move heading up into the election, and then on that news of the vaccine, gold was smacked down there as well. But look where it's holding, guys. It's holding right in this support zone that we've had laid out on this chart now for months. It has not been able to break and hold underneath that 1850 zone, and really 1820 is the bottom of that box. So we're going to continue to watch what happens right here. Gold still just kind of moving slightly down over the last couple of months after this big run up. It still, to me, looks like that potential big bull flag. It looked like we were going to have that breakout, and then, of course, the vaccine news did bode poorly for this market at the moment. We come in and we take a look at silver. Silver holding up better than gold here, actually, which is a good sign for the metals as a whole, right? Continuing to put in higher lows along the way. So while gold is continuing to hit like this support zone on its chart, silver is putting in higher lows, which bodes well also. So this could be an ascending triangle inside this pattern there as well. So now that we've talked about the precious metals, let's jump in and take a look at the gold miners and the gold mining index. Now, what we have up on the screen here is the gold miner index, and we're looking at the number of days where over 70% of its members are above its 200-day moving average. Right, we just fell below that, and this was the fourth longest streak ever in the history of this index. And what we wanted to take a look at is after we've had such strong momentum and we've pulled back where we have less than 70% over their 200-day moving average, what does that mean for us moving forward? Well, logically, you would think that that would be kind of a bad signal, at least in the short term, and then in the long term, it would actually still be a good signal, meaning in the short term, when you fall back below that level, you probably have a little bit of additional weakness, but really what's going on is you're digesting a large move, and long term should actually have positive numbers. And that's kind of exactly what the numbers tell us. When we look at signal dates back across history, where 70% of its members above its 200-day moving average for the first time in 6 months fall underneath that 70% average. Look what happens. 1 week later, it's only positive 67% of the time, with some decent size risk numbers in here with -5, -6%. And then when we get 1 month, 2 month, 3 months, 6 months, a year out, we have a lot of 100% greens, and if we look at the risk to reward 6 months out, average down draw 8.5%, average upside move 20%, right? So the thought process that we were seeing digestion of bigger moves and then momentum continuing certainly plays out in this data set. Now, that data set for 6 months only had 3 points to it, and as you know, I like to look at more than 3 data points. So I relaxed the data and took a look at this instead of 3 months instead of 6 months to get more data points, and the same kind of general rule plays out as we just saw. You're actually positive a higher percentage of the time. Your average risk is a little bit lower there in the beginning, and you go out to a year later. You have one really negative instance in 2011 where the miners fell actually into a protracted bear market. But other than that, you had really good upside potential. So what we've been talking about inside the gold index, right, we're going to have to pay attention to what's going on with the U.S. dollar. Okay, weakness there could certainly continue to be tailwinds for the miners and the metals, but we are also going to pay very close attention to that basing that's been going on inside gold and silver and see if we actually can resolve to the upside. And we are heading into seasonally the best 4 months of the year for the metals. So let's continue to pay close attention. As always, you can reach out to me directly at mtedeschi at Perspective Wealth Planning, or give me a call at 814-580-9881. If you'd love to talk anything about the markets with me, I'm happy to discuss that with you. I hope you guys have yourselves a fantastic week. We'll see you next week. Take care.